Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Starting the fresh week, the Australian dollar remains directionless as it hovers above the key support level, which is seen at 66.65. With bullish divergence still remaining and also with the inverted hammer, should eventually see the market draw fresh demand and move away from this 66.65 area and look on towards 67.25 and then rally on to 67, 70.80 and with the objective still remaining around 68 cents. Meanwhile, the latest inflation report last week in Australia was positive for households, which could sway the Reserve Bank of Australia from any monetary policy tightening. With that, the economic calendar is light this week, but eyes will be focused on the Australian job report and also data out of China, which is the GDP. Moving on to the euro, the market still maintains to a bullish bias as traders now assess the outlook for the US inflation and interest rates and prepare for a round of economic data for this week, that is out of the US. Therefore, could determine the US interest rates and potentially expecting a rate cut in the first quarter of 2024. Market participants are widely expecting for this year of around 6 or more rate cuts. But that all depends on the data. And so far, the inflation data is a little bit mixed after the US PPI unexpectedly fell in December as the costs of goods such as food and diesel fuel declined, while prices for services were unchanged for a third consecutive month. In contrast to Thursday's hotter than expected consumer inflation CPI reading. So as I mentioned, with the uptrend holding around 108.35.45, the bulls should eventually take the challenge higher and move beyond 110 onto 111.30.45 area and reassess. Having posted 2 negative days, the market is a little bit mixed for dollar yen, although Japanese strength has somewhat regained momentum from the weakness, and holding above this midway point could see further weaker play into this week, and therefore look down towards the region of 144.5, and a break there would ignite a move to 143.70 and maybe down to 142.85. Any upward approach should be contained around 146. Sterling still maintaining its strong stance as 8 out of 9 days the bulls are still navigating higher. In light of the pattern, hasn't broken down, so I would like to see the MACD post a positive indication towards the upside along with the RSI marrying up, and therefore would see the top side target achieved around 128 figure 30, maybe even extending on to 129. It would seem that gold has found a little bit more strength as safe haven demand returned as the Middle East crisis escalated. Looking beyond the challenge of 2054.6 could bring gold on towards 2062 and maybe even on towards 2080-84 and reassess. In light of rebounding off the base around 2022-23, that should continue to hold for this week. West Texas oil briefly took a challenge to the top side around that key area of 75.50-75 but rejected. We're finding good supply there. The market is back towards 72.5 at the start of this week. Presently, this roller coaster ride still locked in a 68.5 to a 75.5 range, and we're right bang in the middle. But I will feel any weakness should find demand as the RSI and the MACD still holding relatively firm. Therefore, we should not abandon any topside attempts at this stage, as we should see a re-challenge and reassess from that 75.50-75. Well, that's a wrap. Thank you for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start to the new week.